There's something really interesting going on with MicroStrategy's stock right now. Some powerful signals are flashing just below the surface. Today, we're going to break down the key data that suggests something massive is happening. Let's dive in.
So first up, we've got this market development that's, well, it's so unexpected, it's pretty much screaming for an explanation. Something is happening with MicroStrategy's trading volume that's turning heads all across Wall Street.
So on one side, you have MicroStrategy, a pretty specialized software company. And on the other, you've got Wells Fargo. I mean, we're talking about one of the biggest, oldest, most traditional banks in the United States. You wouldn't think these two are even in the same weight class.
But here's the crazy part, the real hook. MSTR is consistently, day in and day out trading Wells Fargo in sheer volume. Now, this isn't just some fun little trivia fact. This is a massive, profound signal the market is sending us.
You know, that kind of volume, it totally transforms the stock. MSTR isn't just some volatile, risky play anymore in the eyes of the big players. It's graduating. It's becoming what the street calls a liquidity beast. And that massive depth, that ocean of liquidity, that's exactly what brings the serious, long-term institutional money to the table.
Okay, so who's actually driving all this trading? Who's behind this massive volume? Let's peel back another layer here. Because when you see who's doing the trading, well, that's where the real story starts to unfold.
You know, if you're like most people and you just glance at the daily price chart, what do you see? You probably see a lot of noise, right? It's choppy, it's moving sideways, it looks confusing, maybe even a little discouraging if you're an average investor.
But underneath all that surface-level noise, the so-called smart money, the big institutions, they are seeing something completely different. For them, this choppy action isn't a warning sign. It's a massive flashing green light, a golden opportunity to load up on shares quietly without sending the price to the moon.
And believe me, they have been accumulating. We're talking about institutions quietly loading the boat, buying another 10 million shares. And this is the key takeaway. You have this huge divergence. Retail traders see chaos, but the institutions see a once-in-a-lifetime opportunity. That right there, that's the market's loudest possible vote of confidence in where this stock is headed. They are playing a totally different game.
So that begs the question, right? Why are they so darn confident? This isn't just blind buying. It's all based on the absolutely mind-bending potential that Michael Saylor has laid out in his grand vision for the company.
And this really breaks the strategy down perfectly. It's simple, but man, is it audacious. It's a three-step plan. Step 1, raise a ton of capital, usually by taking on debt. Step 2, use every single penny of that capital to buy up Bitcoin. In the end game, the big, hairy, audacious goal, to eventually own 5%. 5% of the entire supply of Bitcoin.
I mean, that is just an incredibly aggressive strategy, right? So what happens if they actually manage to pull this off? What is the potential outcome that has these giant institutions willing to bet billions of dollars on it?
Well, according to Saylor's model, the outcome is staggering. It suggests that if MSTR can successfully corner that much of the Bitcoin supply, the scarcity it would create could rocket the price of a single Bitcoin to $1 million. And if that happens, well, that implies a valuation for MicroStrategy that is just orders of magnitude higher than where it is today. This is the ultimate exponential bet.
Okay, but let's be real for a second. None of this grand vision matters if the engine breaks down, right? The entire MicroStrategy thesis is built on and fueled by Bitcoin. So we absolutely have to pop the hood and check the health of the underlying asset.
And what we're seeing right now is actually pretty strong. The price is holding firm above two absolutely critical levels for institutions. First, you have the VWAP. Think of that as the average price the big guys paid for their Bitcoin. As long as the price is above that, they're in the money and they're happy campers. Then you've got the 200 moving average, which is basically the market's long-term health benchmark. The fact that Bitcoin is holding above both of these tells us the rally is structurally very, very sound.
And the momentum indicators, they're telling the exact same story. We've got a bullish MACD crossover, which is basically a signal that things are speeding up to the upside. And crucially, the Chaikin money flow just flipped positive. This is huge. It shows us directly that real capital, real money is flowing into Bitcoin, not out of it. It totally backs up that whole institutional accumulation story we were just talking about.
All right, so we've got the big picture, the grand vision. Now let's bring it back down to earth and get practical. Let's shift from the why to the how. Let's talk about a potential trading playbook for actually navigating MSTR's price because, let's face it, it's going to be volatile.
So the key concept you need to understand here is what we can call the institutional floor. I want you to picture it like a giant price stamp built by these huge funds. They bought millions and millions of shares in a very specific price zone, which means they have a massive vested interest in defending that level. Any dips into this zone are very likely to get soaked up by their automated buying program.
Okay, so knowing that, it gives us two really clear strategies to work with. On the left, you've got strategy A, the breakout play. This is for a strong green day. If the price breaks through its recent highs, the idea is to jump on board and ride that upward momentum. But you've got to have a tight stop, a clear exit if it starts to fail. Then on the right, you have strategy B, what I'd call the bear trap. This is for a red day. The key here is you don't panic and you don't chase the price down. Instead, you wait patiently for it to dip into that institutional support floor we just mapped out. You look for signs that the selling is drying up and buyers are stepping in, and that's your entry signal. If it breaks below that floor, though, the idea is busted and you get out.
So, at the end of the day, what's the big takeaway here? The MicroStrategy story is this incredible mix of an audacious, almost unbelievable strategy and massive, real-money institutional backing. And it's all balanced on the performance of Bitcoin. It really boils down to one central question, doesn't it? Is this a reckless, high-stakes gamble on the future of money? Or is it the single greatest corporate conviction play of our generation?